Okay, hello and welcome. So we had a live session earlier, but what happened was because of the time frames. So we've got the UK. So London opens in the next 7 minutes. So Germany is already open as a stock market, but a lot of the activity actually comes from when the London market opens in 7 minutes time. So what I was expecting was basically very little activity, which we saw. However, the market did come down and fill the gap. So what that means now is that we're going to watch the open, but basically this close gap has already been filled, meaning it no longer serves as a high probability target. And so what I'll be hoping for is a really good spike up into this activity up here, the breakout long, the R1 or the high, and then followed by this kind of activity. So like, let's say this candle was up a bit higher, it was like off a bit of a positive move. We come up, very thin volume, massive order, and then pushes the market lower. So this is the kind of candle that I would love to see up here when we hit these levels. That is the formation for a very good trade. But we're a long way away. We've already filled the gap, and the German market's already opened, but the UK, basically it's about to open. So where's the close gap there? So close gap's down below. Those who look at the FTSE, you might be interested in perhaps if there is a spike up, very similar sort of an outline. However, there's a good chance that we'll come down and fill this gap potentially. It's about 10 points away. A lot of risk if we break above though. So 17 points compared to 10. The risk reward for this kind of setup isn't ideal. So I wouldn't be necessarily targeting that close gap. We've got 5 minutes till the open. I wouldn't be targeting this at this point in time because the risk reward isn't quite there, because basically if we come all the way up here and that doesn't work, then you're starting to get into some serious hot water. So going to stick to the German 40. We'll just see what it brings us. So ideally, let's have another quick overview. So basically any move outside to hit one of these levels will be outside the Bollinger Bands either way on the 5 minute. Same for the 1 hour. If we sort of break below, we've got to get all the way down here to break outside that bottom Bollinger Band. The interesting thing is the daily. So look, we've had a massive, like a monstrous move long. We've reached these upper bands, kind of overextended once, and then we've kind of hit a wall, I guess, yesterday. And then today, if we can start pushing lower, after, let's say we come up here, touch that upper band again, the triple banding as well, and then start to head south, that would be just a prime position to get in for a long-term short if the market did start to pull down. Because look at where we are on the weekly. We're up around these highs, all-time highs, and then obviously if we do break up above, we might be heading up to that yearly R3 level. So just a reminder, guys, this is not financial advice. I'm not necessarily a professional trader. It's just something that's very dear to me, and sharing my experience in the market as well as trying to pass a prop firm. So it's good to sort of share your experience with in a community and build your knowledge and see different interactions and kind of learn from what other people look for and what mistakes they make. So I do actually make plenty of mistakes on here, as you will probably come to see, and I outline what those mistakes were so that hopefully you don't have to make them yourself. Hi Christopher, thanks for coming back. Apologies about yesterday. I was busy with other things, so wasn't able to get on yesterday, but I am here now, so thanks for coming back. I really appreciate your support. As I mentioned, so we do have a triple banding situation on the pivot points, and what that means is we've got the close gap, and generally the pivot's very close, but this time it's almost at the same price, coupled with the fact that we've got three price levels up here and three pivot points down here, about equal distance to the pivot and the close, top and bottom. And what that often creates is quite a strong, so these are very confluenced levels, so they're very nice and tight together, forming a stronger bond, and they often form almost like a range-bound situation for these markets, which is can be quite helpful. However, when they do break out, it's just unfortunate. So, they offer quite a good guideline as to hopefully you might get a nice spike into these confluence levels, followed by a nice push. An open breakout long. I'd love for it to come up here into this breakout long, followed by this sort of a candle when we get to that level. So very thin volume, pushes up, and then boom, hits that big ask side order, which is likely to be a limit sell, then pushes the market down. So here's hoping. We've got 1 minute. We've got some buy orders coming in. Yeah, so to the upside, it would be really quite good if we can get up there. Now, the only issue is this close gap has already filled. So I'm guessing, are you going to just buy sort of at the open type thing? Because I guess, yeah, we've filled that close gap. So, yeah, I will be looking, personally, I'll be looking for shorts, but yeah, the market does irrationally move up, as I said last week. Now, I did cover that in the earlier session. What do we got? 15 seconds. I might just open up my other platform so I'm ready. Okay. So yeah, we'll see what happens here. Look, that close gap is already filled. So a nice big push up would be really, really quite good, because then what I'll be looking for is to actually, yeah, nice. Okay. So yeah, we're sort of pushing down. Hopefully we can propel right up to that upper triple banding for hopefully some really good shorting opportunities. Perhaps it'll form a bit of a base here and slowly go up. I'm just not sure where the market's going at the minute. Just letting the order flow paint a picture. We've got our levels. Obviously, rejections off the pivot and close could be valid for a long. But there is a chance that we will come all the way down to this triple banding down lower as well. So just got to be really, I guess, cautious when we're trading in the middle of this triple banding. I really do like to wait until we reach the upper or lower bands. Now, while the market's kind of figuring itself out, I'm just going to show you what happens. Now, I was concerned last week that the market was going to just blindly rally. However, the analysis said a spike into, where are we? 10 o'clock. So a spike into the R1 or the breakout long, followed by either the close gap or even down to the breakout short. That was my analysis last week. However, I went against it simply because I didn't trust that the market was going to fall. Now, that's just, I guess, a lesson that you shouldn't always trust in your analysis, but you should essentially back it more than just on your gut feeling, because that's what I did on Friday. I went on gut feeling because a market that I don't always trade, because it doesn't react as well as the DAX, blindly went up and ignored a lot of levels. I thought that was going to correspond to the DAX on that day, particularly from the previous days that we saw, about 500 points of rallying, and that led me to believe that there could have been, we're at 24,500 on the full futures. Just a quick note, I'll be watching particularly around when we hit the pivot, just to see if there's any indication that we might be turning back up to the upside. just with consideration that we could come all the way down to this previous day's low. So just watching. And also, guys, I do appreciate your likes if you enjoy the session or get something out of it, which I hope you do. Open to suggestion, of course. If you think there's something I'm missing or need to add, do let me know. But yeah, your likes really do keep me coming back and sharing my insight, at least, on the markets, as well as trading for prop firms and trying to pass those challenges. So it looks like we've got a bit of a build up here. It could be selling, but it could also be buying. So just remember that each bid and ask order could be buying and selling based on whether it's a limit order, so it's being placed away from the market, or if it's a market order, so somebody's hitting that order saying, right, I want to get in right now. So bid side market orders are sells. Ask side market orders are buyers, because somebody's coming in, right, I want to buy at this price, I want to buy at this price. But over here, if I want to sell at this price, I've got to go all the way down, and that's a market order. So boom, if I hit the bid side from the ask side kind of level, got quite a build up here. We've got a lot of buying coming in. That looks like aggressive buying to me on the mini. Okay, and that's respecting it now. So yeah, if that's not quite making sense with the bid and ask, read Tradodale's order flow book. That really helped me kind of wrap my head around what each bid and ask order means, as well as like developing an overall picture of the market and what it looks like, so that you can make better decisions in the live market. So just to recap what we're seeing here, this looked like a build-up of buy limits, and it was sort of forming a bit of a base. We saw down here as well, we had some aggressive buying coming in. We did see a little push up for about 10 points of movement from that base. Hopefully we can get a little bit lower so that we've got something to work with, and perhaps we see that buying activity a little bit stronger, a bit closer to the pivot, but who knows, that could be it. So what I'm doing here though is just waiting for the right price to be reached before I even look at getting in. So from here, unless something major happens on the order flow, I'm not looking to get in. So it's a game of patience, and I don't want to get trapped in a trade that doesn't really make sense. We are on the 24,500 mark. We seem to be kind of rejecting off that price to the long side, but I'm not 100% sure if it'll hold, and that's why I'm not getting in just yet. So just waiting it out, seeing what the market gives us. Just going to check some of the other time frames. So it looks like this, kind of looks like this candle or set of candles is turning down now from this massive rally last week. But we're getting some buying activity to hopefully push us higher, get us into into a better position. So like, let's say that the market's up here, it'd be much better to get in. So for the order flow, look, I probably explained it a little bit. It's not the best way to explain it. That's why I refer to the Tradodale's book. He's got some good video tutorials as well on YouTube. But basically the bid and ask can have, so like, let's say the bid, if it's a limit order, it's buying. If it's a market order, it's selling, and vice versa on the ask side. So if it's a, like it'd be a limit sell or a market buy. So I actually kind of have to write that down and visualize it to actually make it make sense. But I'll give you an example. We should be all right to pull away just for the moment. Okay, so very thin activity here on this candle. And then we've got 40 contracts at the 2523 price. Now what that tells me is the market's come up. Let's say the market did come up. and we've hit this 40 or this price mark and 40 contracts came in on the ask side, that tells me that it's more likely to be a limit sell because the market's moved up, hit the limit, and then the market pulls away and then it sells off because that was quite a big order there. So had that of 40 contracts been, say, next to this 9, so like 9 and then 40, I would then be thinking, okay, maybe that's a market order, and a market ask order means it's buyers coming into the market. So then I'd expect the market to go up instead of down. It is a little bit confusing, and I probably don't explain it the best way. It actually sort of takes a bit of training to figure out which side is which. I'll see if I can make up a bit of a resource to make it simpler as well. But basically when you see this kind of activity here, so we've got this to me looks like bid, so they're bid orders, and then because it's at the low of the candle, it looks like buyers, so buy limits, followed by aggressive buyers coming into the ask side, and then we had that 16 contracts here, or well, it keeps increasing now, but so you've got bid side limits followed by aggressive ask side orders at the bottom of the candle, looks like buying, and we saw a pretty good rejection, about 20 points odd from these levels. So and obviously vice versa from the top side. So when you go up the top, there's not a real good, I guess, indication, but I guess you've got a 13 here, which is likely a limit sell, followed by aggressive bid orders coming in to push that market down. It's not the best example because you've got plenty of ask orders on the way up there too. So there's generally better examples as you watch the market more. Particularly, that sort of order flow, that sort of a situation. So if this was happening on the pivot, then I'd be more inclined to get long off the basis of that. But I really look for combination evidence that we're going to turn around. So just on the basis of order flow alone, I don't like to get in, depending on the situation. So that's why I have both charts up. The pivot points kind of give me a level to look for. And then once we hit that level, I'm then watching the order flow to say, okay, does the market respect this level? And are we going to see a reaction based on the order flow? Yeah, I'm not sure how to get that on IBKR, unfortunately, sorry. I'll just see if I can look it up. So often, I think you actually, payment for order flow. Look, I'm not sure if they actually provide it, but so for example, often you can get it on things like Sierra charts, but it's a bit tricky to use. So I had Sierra charts for a while, but I just found it a bit, it is very good if you can figure it out, but I just find it a bit confusing and a bit clunky. So when I found out Tradovate gives you the data with, for example, an Apex account, and then you can just simply add on the Eurex, I found that a lot easier. Look, I'm not sure we're actually going to get a proper setup unless the market really starts to move. I'm probably not going to be able to get a good entry. It'll be another situation where I'm looking for the market to reach these the triple banding, either high or low, and then that's when awesome. Yeah, I hope so. That's what I'm expecting. If it doesn't happen or it's quite slow though, basically it'll be a matter of just waiting for the market to get up to these levels. So we're kind of reaching the upper limits now. I'll just zoom in on this volume profile here, or the order flow, I should say. It would be great if we can break up from here. There we go, there's some more buying coming in, or potentially that was an ask order, because then we're getting some bid orders on this other side. So that's maybe a sell limit followed by aggressive selling, and it'll take the aggressive buyers to push through that so that we get that breakout that you're after. Because if we can get up to this level, it'll be a very, very good short, I think, anyway. That looks like aggressive selling. That looks like aggressive buying, I should say. Aggressive buying. But then somebody comes in and looks like it's selling coming on this side too. There we go, 15 contracts. It's getting heavier, so it's building. So this order flow is telling us a bit of a picture. I do hope that the market will push up and give us a better entry, because from this price here, I don't want to get short, because there is a good chance that we will come up to this price point here. However, I don't want to get long either, because if we do start sort of folding away, then we'll be in trouble. So just kind of waiting it out. It's a very slow market. Now, I mentioned earlier in the last video from earlier today, but basically the two time zones are now at different times. So we've got a German Open an hour before the UK Open, and then that kind of causes a few weeks of it's a bit funny when the market opens. It's different to how it normally works, and often I often don't have the best start to trading in that period, because basically the market's kind of operating at a different in a different manner than it usually does, because the two time zones are split. So London doesn't start trading until an hour after Germany's already open, and it kind of throws it a little bit. And then we get activity like this where it's kind of caught in quite a slow range, and sometimes it moves really quick, so it's very hard to judge when that volatility is actually going to come in. This looks like aggressive selling, so it's bid side orders pushing the market lower, kind of at the top of the range, telling me that it could be more likely to be aggressive sellers trying to push the market down. And this 9 contract, it's kind of in the middle of this area, but basically if that was an ask limit order, that's sellers pushing the market down as well. So anyway, guys, I'm probably going to leave it with you there. I'm not really seeing what I'm looking for. If the close gap hadn't been filled, I might sort of be tempted to hang around a bit longer. But basically, what we're looking for is these triple bands, the 3 levels, top and bottom of the close and the pivot, will form quite good barriers for us to watch. Now, I'll be looking for rejections, particularly off either side actually, and if I can get the order flow to paint the same picture that the pivot points are saying, so like rejection off these levels, and let's say the order flow kind of points to the same conclusion, then I'll be looking to enter. So short from up here or long from down here potentially, depending on what the order flow is doing. I think it's going to take quite some time to actually get there though. Here we go. Bit of activity. Will it break through though? Will it break? We need a bit of volatility to push the market. We'll have a quick look at the UK. So the UK is kind of just steadily floating long. So let's say we reach these levels, very similar situation to the DAX. Looks like it didn't quite break through though. So I'm not going to sit here and wait and watch, but basically that's what I will be looking for outside of this this live session. But thank you guys for joining me. Really appreciate you coming back, Christopher. Best of luck with your trading, and we'll come back tomorrow and see what we can find in the markets. Thank you guys. Goodbye.